Greetings, members one and all of the Salivation Nation. Why is silver so stagnant? And when will it start moving and catching up to gold? That's the subject of today's video. Let's explore! A little disclaimer here. This is an article from goldsilver.com shared with me by Chuck and Plata, and it's by Jeff Clark, who is a senior analyst there. And I may not agree with everything that Jeff Clark says, and you have to keep in mind that he does work for a pretty big bullion dealer. And so there is going to be somewhat of an agenda there. But I believe finding truth and data is certainly important no matter where it comes. And we can kind of interpret it in many different ways. You know, one thing I try to do is keep a balanced view. Even though I am bullish on both gold and silver, I'm cautiously more cautious in my optimism for silver than I am gold. But I do believe it will probably rise in the future as we are headed for a deeper recession, I believe, here. So let's take a look at this and pick this apart. One thing I will say about Jeff Clark and his presentations is he does make things pretty crystal clear, and I believe there is some truth. His interpretation of the data I may disagree with on some level, but I believe that he is not trying to hoodwink us on the data. However, as is always the case, data can be presented in certain ways. For instance, averaging comes in three different areas. You know, you have standard deviation, the median, and mode. And depending on how it's presented, can make a big difference. So we have to take this as a cautionary tale as we go through this particular piece here. It hasn't been fun for silver investors. You know, he admits that. Gold has moved higher in response to the crisis, but silver has been nothing but weak and vulnerable this year. And that's an area where he's given some ground on, which I disagree with. The actual physical price is actually staying relatively stable through this crisis. The premiums have risen, even though the spot price has gone down. So he asked the question, is this silver's destiny? Is this all we can expect for the foreseeable future? And he says that's not, no. The history has a big change in the silver price. The history says a big change in silver price is coming. We'll look at that. But first, we'll examine why, at this point in the crisis, it's been so lifeless. So silver, at the onset of the crisis, we've fielded a lot of questions about silver and isn't rising in the midst of the biggest crisis in modern times, and at a time when gold is rising. But he's saying the lag in the silver price is historically normal behavior when these types of crises first strike, although the gold to silver ratio would say otherwise in some cases, at least by the paper price. The two biggest effects in the pandemic have been the stock market crash and a hit to economic activity. How has silver performed during these events in the past? And this is where it gets really interesting. Here's how both gold and silver prices have performed during the 8 biggest stock market crashes before this one. Green means it was a positive return. Yellow means it fell, but less than the S&P 500. And red means it fell more than stocks. So here we can see that during the the crisis in the 76 to 78, S&P was down, gold was up, and silver was up. Gold was up a lot more, though, than silver. In 80 through 82, it looks like during the stock market crashes, gold was down 46 and silver was down 66%. That's interesting because that's during that big height. So we can see these other levels here where the S&P was down, and most all these other cases, they were up, except for, are down very slightly, but gold has performed better in all these cases. You can see that gold rose in every instance but two, with one of those declines less than the S&P 500, and we should also point out during the 80-82 period, which right after gold's big bull market in recorded history, so the sell-off wasn't exactly surprising. Overall, a pretty good track record. And but for the silver, it was almost the opposite. Over the last 45 years, it has risen in only two of the biggest stock market crashes, one of which was only 1%, and fallen in all the others. It did fall less than the S&P 500 in 5 of those instances, but more in 2 of them. The data suggest that in the throes of a stock market crash, a decline in the silver price is historically normal behavior, even though it is usually less than the S&P 500. If we added in the 2020 crash, the bar would be red for silver. Through April 24th, silver is down almost 15% year to date, while the S&P 500 has fallen 12%. What about during economic slowdowns? While we haven't officially entered a recession, it's clear one is on the way. Here's how silver has performed during the past 7 recessions in the U.S. dating back 50 years. So we can see here silver price down negative 13%, down negative 60% here. And so you can see the times where it has been low. It has gone down pretty substantially during all these times, during the actual recession periods themselves. In the last 7 recessions, the silver price fell in 5 of them and rose in 2. The range in returns has been wide, including some gains, but overall silver has not logged a strong track record during recessionary periods. This is in stark contrast to gold. Gold usually positive during recessions. Look at that. It does snap very much quicker, except for 2 times here. But look at that. Gold has risen in 5 of the past 7 recessions, and in the 2 it fell. The decline was only by single digits. The data specifically tells us that silver is not highly responsive to a shock, to a stock market crash or a recession. This isn't terribly surprising. In 2019, 81% of silver supply went to non-monetary use. That is surprising, actually, but I guess in some ways it shouldn't be. We know 55 to 60% of silver is used in industrial uses, and it seems to be growing. That's how the market sees it. But 81%, that's quite an interesting number of percent, for sure. If economic activity declines, demand for these uses, for the most part, would also decline. If investors are scared by a crash in stocks or an onset of a recession, they tend to flee to gold first. In other words, silver's recent price behavior based on the last 50 years of history is normal. So what is going to push silver higher and when? There are a lot of potential catalysts, but 3 stick out. A rise in inflation, which makes sense. Inflation isn't on the radar of most investors right now, but given the extent of currency abuse, especially with the Fed's public admission that QE is unlimited and open-ended, it seems unwise to assume inflation isn't a future reality, and it could get here sooner and soar higher than many think. And silver's 2 biggest modern-day rises have occurred during inflationary environments: the runaway inflation of the 70s, and when investors feared inflation during the Great Recession. Here's how much silver rose during those periods, plus what the silver price would reach if we matched them from today's $15 level. From 76 to 80, silver gains 1,099%. Applied to today's price would be $179.85. And in 2008 to 2011, it rose less than half of that, or more than half of that, to 448%, or $82.20 at today's level. And based on the massive amount of currency abuse underway and the inflation that is likely to result, prices in this range seem not just realistic, but likely. The thing is when will that happen? Then the long fuse. This isn't a catalyst per se, but it is a fact worth revisiting. Silver historically has a longer fuse to ignition than gold. So in other words, predicting this may be tougher. And research before that a good reminder, since we seem to be in the middle of this reality right now. In the 5 precious metal bulls markets in modern history, silver typically lags gold, then catches up and passes it. So here we can see where we saw the silver outperform gold in these particular cases here, 2001 to 2008. 2008, 2011, especially big time there. And we saw the gold to silver ratio here squeeze down to in the 30s for sure. I think the last recession here is why there's so much bull market in silver, where folks, silver bugs and silver pumpers, I guess, rely on that. However, the 1976, 1980, it did this massive squeeze, and it went up to this certain level here, but was only for a very short amount of time. This is yet more evidence of silver's current price behavior as historically normal. The reason for this, again, is because investors turn first to gold in the initial shock of the crisis. It's the reflexive go-to asset when fear and uncertainty strike. As gold becomes more expensive, investors then turn to silver. Silver hasn't entered that catch-up phase yet, so let's insert the current price into the 1976-80 bull market and see where we might stand in historic context. Silver bottomed last month at $12.05, actually went into, for a moment of time, he's averaging it out, into the high $11 price. It's since risen 27%, as this article was written. There's 27% rise would be situated in the 1970s bull market. We are here, and so therefore we could see 11,000% rise there if you take the data and apply it to that metric. The arrow points to the same percentage rise as we have now. It was first seen in the 70s bull market. It took another year for the price to really get going, but once it did, the returns were spectacular. Imagine how silver investors felt back then. Some of them surely thought silver wasn't rising. It should be, especially when there were crises all around them, and recessions, skyrocketing inflation, and mortgage rates, high unemployment, etc. Yet, if they let discouragement push them to sell, they would have missed out on one of silver's biggest bull markets. The price doubled in 18 months, allowing investors to held to the top and add zero to their investment. Eventually, investors turned to silver in a big and life-changing way. Silver Institute released their report in 2019 and concluded that silver outperformed gold later this year. So they're making that prediction too, but it is a Silver Institute. History says silver surge is coming. It means we should hold on while and make sure we have the amount of metal we want. The next catalyst, and probably the biggest of them all, is the real-world effects of monetary destruction. And well, I think that conflates with inflation. And I think that the short answer is, while we're currently in the middle of a huge deflationary dip, what comes next is big inflation, maybe even hyperinflation. This deflationary period could last another year or two, but inflation will come to a point when the government has sent people enough cash to where they feel like they can go and spend again. It's probably going to take a lot of currency creation to get the baby boomers who are now scared and out of time to do that. When the real-world effects of this massive currency destruction begin to set in, the rush to silver and gold is likely to be enormous. If you haven't watched it, The Hidden Secrets of Money lays out that case, and we'll see what happens. The thing is when he conflates this story here to today's numbers, to the crisis of 1976 and 1980, remember what really led silver to go up as high as it did was a cornering of the market by the Hunt brothers. That is not mentioned anywhere in this particular case, so I think it's a fool's errand to conflate what's happening today utilizing the model of the 1976 and 1980 to it. I don't think you can even do the same thing with the 2007 and 2008 crisis, although that would be a better example. We're in a unique situation here, folks. And as to the severity of this recession, no one really knows. But there are some people that are obviously saying it's going to be a deeper recession than in 2007, 2008. And we shall see. I hope not. There are others that think that's going to be a massive depression, and it's going to be a global depression, as economies around the world are suffering because of this. And so that could mean that all bets are off the table. But it also doesn't take into account that less demand. If he's saying what he's saying up here is true about the 80% of silver supply went to non-monetary uses, that's going to be supply that's not going to be there, or that's going to be not mined or not going to be out there, and which means that either that silver will be mined and be available to use for coins and rounds and bullion, which means that the silver price may not go up as quickly. The other side of that is demand remains high, then mining will be primary silver mining will take place or try to be accumulated, and then if that does the case, then that we might still have a continued supply squeeze because primary silver mining is on the decline big time. But if this keeps up, the places like First Majestic and other primary silver miners out there will do their best to try to find new veins of silver out there or sources and good quality. And we'll see what happens. But regardless, this really doesn't answer the question as to when it will start moving. And so I would guess that we just have to be patient, and that is really what it's about. I think inflation will be the key, and I believe that also economic conditions as far as silver mining and supply chains being reconnected will certainly play a role in this as we move forward from here. Post your thoughts below. Interesting indeed, interesting data to mull through. I'd like to thanks again to Chuck and Plata for sending this along to me and extend a multitude of gratitude to you all for taking the time to watch. I encourage you to please rate, share, comment, and subscribe.